It's definitely a longer period now than it used to be.
How long did it take to get to the point where you're somewhat successful?
You never know. You never know what's around the corner. Like, you'd figure out one strategy, it might last for 6 months, and then slowly the edge starts to disappear. You start feeling a bit confident, and then maybe 3 years before you feel I'm actually getting rewarded here somewhat for all the effort I've put in. There's a difference between trading crypto for an hour a day while you're in college or you have a regular job, and actually sitting down in front of the screens for 8 hours a day, 10 hours a day. If you are the only person in the world that's figured that out, great, good luck. But in practice, it's often you're not the first, you won't be the last.
What makes the difference between a successful trader going on to actually become profitable to somebody who potentially falls off and can't compete with the guys that are hitting the heights?
Some people come in and they say, I've tried it, I failed, and now I'm trying it again, and I'm having better results because I'm taking a different approach. I understand risk. I understand I can't just hold a losing trade. What happens when the rules of the world change like they are right now?
Hello and welcome back to Two Blokes Trading podcast. This is episode 3, season 2, and I'm delighted to be here in Positive Equity, along with John White. He's one of the co-founders. We're in the HQ today, and we're going to pick John's brains and see what he has to talk about within the financial markets. Thank you so much for coming on.
My pleasure. Thanks, Jonathan.
Great. So tell me, I suppose, let's start with your background. Obviously, I've done a bit of deep diving into some of your past as well.
What'd you find?
No closets in there, or no bones in the closet. But tell me, you started in Geneva, is that right?
Started in Geneva Trading, yeah. Worked in Geneva Trading in Dublin City Key straight out of college. Applied for a few trading jobs. Wasn't really sure why I thought trading would be good for me, but I just felt it suited me. I liked numbers. Applied for a few jobs. A few of them rejected me. Geneva offered me an interview, and the rest is history. But I do remember their ad was pretty short, and it said, "Do you want to earn income commensurate with your effort?" And I was like, I think I'm a pretty hard worker. I think that sounds pretty good, so I'll give it a go. And
no experience, no pre-experience in trading?
Absolutely not. No. Finished college, did a business degree, did a financial services master's for a year, so was in college for 4 years. 2 or 3 months later, started with Geneva.
How long did it take to get to the point where you're somewhat successful?
How would you define success?
I suppose as a break-even success at the start. I assume success is getting to a point where you're actually able to take a wage. Now, bearing in mind, prop trading is based upon how much you earn, I assume, right?
Yeah. So at the time in Geneva, like they were paying salaries or stipends. So trainees were getting a little bit of money. It's the same in Positive. We pay our trainees, but you wouldn't define that as success. So I guess it was at least 2 years in before you feel I've figured enough of this game out to be consistently successful. And you never know what's around the corner. Like, you'd figure out one strategy, it might last for 6 months, and then slowly the edge starts to disappear and you have to go and figure something out. But I think you get a bit of confidence after the first couple of years. But I would say it's definitely a longer period now than it used to be. Like, that was a long time ago, 2003, 2004 maybe. For us, it's a year on the simulation in Positive Equity or thereabouts. It's another year live, and for sure you're going in the right direction, but I think it's at least 2 years before you start feeling a bit confident, and then maybe 3 years before you feel I'm actually getting rewarded here somewhat for all the effort I've put in.
Sure. You spoke about the trading edge and how you can actually lose that edge at any given time. Does that come from a series of maybe bad trades over a period of time? Does the strategy just no longer is holding up? Is it macroeconomic?
It's both. It's oftentimes the market is smart. 8 billion people in the world and counting. And so if there's edge or competitive advantage or a way to make profit, and you figure it out first, if you are the only person in the world that's figured that out, good luck, but in practice, it's often you're not the first, you won't be the last, and edge just dissipates over time often. And so, or markets could change, the market might be going up and grinding higher in the S&P, and your strategy might be working. And then what happens when the rules of the world change like they are right now? The market changes, it's more volatile, maybe you can't manage your trades with the same level of risk reward, and so you're constantly trying to figure out what's next, I guess.
Sure. And I suppose coming through the process, what makes the difference between a successful trader going on to actually become profitable to somebody who potentially falls off and can't compete with the guys that are hitting the heights?
Well, I can only speak from the experience here, which is like the people that train here are generally good with numbers, super smart, competitive, have a record of success in their lives, and yet not all of them will be successful. So I think you have to think long term as well. Like at this stage, I think we've managed to convince most people we talk to that it's not a get rich quick scheme. It's multiple years like we just spoke about. And if you're willing to put in that effort and you're thinking 3, 4, 5 years, I think then, and you're learning the lessons quickly, you're listening to your trainers, learning from your mistakes, taking notes, correcting all the mistakes you make at the start, then if you stick with it long enough, you stay in the game long enough, I think you're going to learn enough lessons to make it stick and then become consistently profitable. But, it's... can you actually do that? Can people do that? There's a difference between, trading crypto for an hour a day while you're in college or you have a regular job, and actually sitting down in front of the screens for 8 hours a day, 10 hours a day, researching, devouring news, figuring out what's going to happen next. And I think you obviously have to have some level of enjoyment of it to be motivated to go that extra mile. So that's important too.
Sure. I think in any business or any profession, there is that period, and you can't skip that period, that learning process. We all want to get there. We all want to kind of reach the heights, but it's a process. And I suppose looking through the guys that come through your programs here, I mean, what is the key defining moment for them to get through that process, to get onto the floor for you? I mean, what do you actually really look for in a trader? Like, what's that one spark element that gets you on this program?
Before they come onto the trading floor, before they've worked with us? I mean, the reality is we're not experts, and it's not a flawless process. It's impossible for us to know for sure how successful somebody's going to be in day one. And we all like to talk about how the super traders that we know and work with, we knew from the start, when I spoke to this person first, I knew they were going to be a winner. But it's tough. But the things we look for are, as I said, smarts, academics, sharp with numbers, competitive. Grit is how a lot of people describe it. You take setbacks, because the difficult part to accept about the markets is you do all these great things in your life and you're competitive and successful in lots of different ways. And then you come to the market and some people do expect for there to be instant success. It's so easy to trade. You open up your phone, trade on Revolut. Okay, I'm long, whatever, Tesla. So it's easy to do, but hard to master. And I think because the market is so accessible and people get the idea of buying and selling, some people do think it's going to be easy. And we just haven't seen it. We haven't seen in all our 20 years or so of training somebody who's instantly so qualified and skilled that they can make money in the markets. It's like picking up a set of golf clubs and thinking you can compete in the Masters. Nobody thinks they can do that, but some people think it's easier in the market somewhat.
Two things. To get into prop trading, do you think it's valuable to have trading experience prior? Number one. And number two is, what's the main difference between retail traders and prop traders?
Okay. In our experience, prior trading isn't a great gauge of future success, because where are you going to learn it from? Well, okay, teach yourself on your phone, learn from mistakes every day. You don't have any input or accountability, or you watch YouTube videos and of course, there's great content out there and there's great companies out there. But there's also, just like anything, there's marketing things out there, and it's hard if you're starting out to know the difference between the two. So it's a really difficult thing to teach yourself. And so on that basis, for sure, if somebody has trading experience, we like to see people that have invested. Okay, I bought into S&P ETFs. Why do you want to do that? Oh, I just want to keep track of the market. I want to see what's going on, but actually trading, getting in and out of currency, for example, you're competing in a market that lots of our traders will not compete in that market because we don't believe we have competitive advantage. And so, why do you think you're going to be competitive having, none of the other resources that we have? So it's tough for retail traders. It really is. It's not impossible if you play the long game. And I think risk management is what you can learn as a retail trader. Mm-hmm. So sometimes when people come in and they say, I've tried it, I failed, and now I'm trying it again, and I'm having better results because I'm taking a different approach. I understand risk. I understand I can't just hold a losing trade. I've got stops. All those things count for a lot. But the odds are against retail traders making the supernormal profit, say, the big bucks, because there's software, there's costs. I mean, they're the basics, right? We know that professionals are going to have, better costs, better systems, but it's also professionals have the ability to sit there all day out there on the trading floor and wait for something to happen. So we have the advantage of patience. I can sit there in front of my screens and I don't have to do anything if I don't want to. I can wait for something to come to me. Whereas I think if you're retail, you've got an hour a day in the evening time. You want to trade, you want to put trades on and get in and out of the market. And it mightn't be the best time and your competitive advantage mightn't be there. So, I mean, I think they're some of the reasons why it's tough. Not impossible, but of course, it is possible to learn lots of the lessons required when you're starting out as a retail trader, if you listen to the right people and learn from your mistakes as well.
100%. And once you get your seat on the floor, mm-hmm. Obviously there's guidelines and rules. Mm. What are the kind of risk management guidelines that the guys have out there?
Okay, so we've got a trainee class here starting in a few days, and initially they'll trade pretty soon after they start. They might have, say, a downside limit, as we say, of, let's say, $1,000. They can't lose more than $1,000 in a day. We'll let them trade for a couple of weeks, get used to the software, get used to taking winners and losers, and we will actually start dragging that number lower in the initial stages as they get better at what they're doing. So, the first 6 months of a trainee's life here, they mightn't be allowed to lose more than $500 in a day. And there are some retail traders that might take more than $500 of a loser in one day. But the way we see it is, if you can make $1,000, if you can make $1,500 with a €500 downside, and you're trading the futures markets, which are huge, then you can multiply out what you do as you get better and better and better. So it's pretty tight discipline in terms of risk. Mm-hmm. We might say, okay, any one trade at the start can't be more than, let's say, a 10-tick loser, $100 in oil or something like that. Mm-hmm. It's not much, but we want to see trainees do it on small size at the start, and then it's infinitely scalable within reason.
Perfect.
But the risk is a deal breaker. It's a non-negotiable. And I think it is the thing that you can learn quickly. Actually, is risk management. So, like, we run an internship every summer for a month, and at the end of the month, you can see for sure who can control their risk and who is really struggling with it. So if there's people that pick that up quick, stand a great chance, because if a trader, say, has almost all their trades as losing trades, but they're small trades, small losers, they can stay in the game. And if you stay in the game, you can last longer, and that gives you more chance to learn all the lessons to become successful.
Perfect. And tell me, what's the best trade that you've took on the floor?
Well, the best trades, the best trades tend to be something that we can plan for, and something where there's a clear outcome. An election is a good example. Is the vote yes or no? It's kind of easier to game that out. What happens if it's a yes? What happens if it's a no? And we can figure from just looking at opinion polls, how does the market react to them? What the market's going to do. So if you have like a basic kind of yes, no, or up, down, or inflation beats or not beats, and you know when it's going to happen as well. So if you know economic data is coming from the States at a certain time, or an election is happening at a certain time, then you've got two massive things in your favor. So Brexit is an example I always think about. It's a binary result. Mm-hmm. It was a surprising result, I thought, but it's you know, it's one or the other. It's yes or no. We're in or we're out. We know roughly when it's going to happen after the election polls close, and then, you know, everybody has their game plan. Everybody can, you know, in poker analogy, maybe go all in because they just know from experience and looking at the past and what the market did for the last 6 months, what it should do with this election result. So they're the kind of things that are really the things that traders like, because there's a lot of controllables in there.
Sure. You have a big floor out there. I mean, do your traders share information, or is it a case that the top traders are trying to keep their own, you know, their own trade secrets in house? I mean, how does that work?
It's like human relations. We can't make people be friends, but when people trust each other, amazing things happen. So like we've got 7 trainees coming in next week. They don't know anybody here really, apart from when they interned with us for a few weeks over a summer last year. And the onus is on them to build up a relationship with senior traders. And what they have in their favor is they're fresh sets of eyes on the market. They might trade different strategies in different ways to what the more senior guys have done. They're probably there's an incentive for them to be more creative with tools, building tools on, let's say, Excel or news tools. So the onus is on the newbies to bring something to the floor, and the senior staff know this. So it's a two-way thing. And so once you appreciate that, you can see how professional relationships build up. And if I trust you, if I think you're working hard and, oh, okay, you built a tool for me or you did that piece of research, okay, you say to me, hey, what are you doing there, John? And I'm like, okay, well, I'm trying to get along here because this, and this, and that's how the relationship goes. So it's you know, talking about retail traders, it's you don't really have that as a retail trader, you know. So as a professional, if there's, you know, 20 or 30 people out there all spending the whole day looking at the markets. There's people out there that know more than me about different things. They're better at coding. They're better at Excel. They understand what's expected on NVIDIA earnings better than me. And so if I learn a bit from them, they learn a bit from me, everybody's happy.
Awesome. Brilliant. So tell me, what advice would you give to somebody that's looking to get into the prop trading industry?
Okay. I'd say read a lot and listen a lot to great podcasts like this. You know, when we interview trainees and they're trying to get into the game, and a lot of students might be really high performing and have loads of great things in their CV, but don't know, do they want to be a trader? So we always say, go and read Market Wizards, go and read Alpha Trader by Brent Donnelly, go and read all these books that involve professional traders. And because people are quite like honest when you actually ask them. Like, so in the Market Wizards, you know, these folks are talking about the trades, how they trade, their big mistakes, what to avoid. If you're like listening and reading all that to all that stuff a lot of the time, you're learning things. So I would say that's one thing. I would say don't lose too much of your own money, because I mean, our trainees are on the simulator monopoly money for, let's say, a year or so. And it takes them that long before they get consistently profitable enough to say, okay, ready to go live. So if you could trade on a simulator or open a demo account and you can take it seriously, maybe you get a friend to check your stats, your trades every day, just for accountability. That helps a lot, because then you're engaged with the market. And that's key, because anybody can mess around on a simulator account, whereas in positive, the trainees trade on the simulator. You don't want to make a mistake because you don't want to look like a fool in front of everyone when you do the trading review at the end of the day. So that's the kind of accountability there. So as a retail person, if you've got somebody that's got your back, share information with them and share your stats.
Tell me, you start off in a demo, and like most traders do, they start in a demo. But the psychological factor of moving on to that real money, do they have that same process? Do they feel more pressure when they get onto a live terminal?
I think it's different now. I spilled a glass of water on my keyboard on my first live trading day, which was a disaster because I was so nervous. And I think the software is just better now. Certainly the software we use, there's no real tangible difference in terms of speed or execution between the sim and the live market, as we call it. So of course it's psychological, but if you've been on the simulator for a year and you graduated a year ago, you did an internship with us, you went back to college, you did more interviews to get onto this trading job, you've worked your ass off for a year on the simulator, doing all this research and learning about the markets, you're just like, let me at it. And your stats, you trade the firm's money when we believe you're consistently profitable enough on the sim to do that. So I think for sure it's a slight thing, but it's just like 1 in 100 different things in a trader's career you get over, Your very first day in here when you click the mouse button, the first day you make $1,000 on the sim, going live, making X amount of money, all these things are milestones. Yeah, they're big at the time, but we find more often than not, people are just, let me at it as soon as they're qualified. Yeah.
Awesome. Lastly, tell me, for our listeners and viewers, is there a stock pick? Is there something that you guys are looking at? Can you give us a tidbit?
No, I wish there was, Jonathan. The thing is, so we trade stocks, we trade futures, we're in and out of them all day, and we change our mind pretty quickly sometimes, and the information that we use to buy might, the reasons to get into a trade might disappear pretty quickly. So we just trade volatility. We don't care whether something is going to go up or down the next 6 months. We care about what it's going to do in the next 10 minutes, the next hour, the next day, for some traders, the next few weeks. So I would always say, the same as Warren Buffett says, if you want advice, put your money into an S&P ETF, a Euro stocks ETF. If you want to be real risk-taking, maybe look at some of the Asian economies that might grow faster over the next few years. But that'd be it. We don't we don't profess to be experts. We just think we know with a high degree of probability sometimes what's going to happen before the end of today or before the end of the week.
Awesome. Thank you so much for coming on, John. It's a real pleasure, and invite me to your office today as well.
No problems. Appreciate it.
Take care,
Thanks,
guys.
Jonathan.
Thank you so much.
Thank you.